Hi, welcome to Finivize. Are you ready to dive into a real-life mystery that involves billions of dollars and unexpected connections? In this video, we're going to take a deep dive into the collapse of FTX, the second largest cryptocurrency exchange in the world, and uncover the strange series of events that led to its downfall. You'll get an exclusive look into the life of Sam Bankman-Fried, the CEO of FTX, and how he went from a politically connected family to becoming a billionaire entrepreneur. We'll explore the peculiar links between American politics, the war in Ukraine, and Enron that played a role in this incredible story. But that's not all. We'll also reveal how FTT tokens triggered the collapse, and how Binance came to the rescue by buying FTX in just a day. With over 100 affiliated companies collapsing and more than $8 billion of customers' funds lost, this story is one for the history books. So stick around till the end of the video to find out how this all went down and how Sam Bankman-Fried's net worth of $26 billion took a hit. Get ready for a wild ride that you won't forget. FTX was more than just a derivatives exchange. It was a ticking time bomb that exploded thanks to a token called FTT. And it all started with the mastermind behind the operation, Sam Bankman-Fried. Sam, a brilliant entrepreneur with a net worth of $26 billion, created the FTT token to finance his project, but little did he know that this token would eventually cause his downfall. His team at Alameda Research, made up of ex-coworkers from Jane Street and other brilliant minds from MIT, partied together and had romantic relationships while keeping their high-level management in the dark about what they were doing. As the crypto market began to decline, questions about Alameda's financial stability arose, and things started to unravel. But that's not all. Sam's main rival, CZ, saw FTX as a genuine competitor in the market and bought a 20% stake in the company for $100 million. However, Sam had other plans and bought back the stock for $2 billion, paying part of it with FTT tokens. This shady transaction was just the beginning of the end for FTX. But the story doesn't end there. There are allegations of corruption within the US government, as the SEC was allegedly going to give FTX no action relief. What does this mean for the future of cryptocurrency exchanges? And how can we prevent this from happening again? Another important aspect in this story is the recent bankruptcies of several crypto lenders caused by the FTX collapse, including Celsius Network, BlockFi, and Voyager Digital, and how they affect other currencies, investors, and companies. According to Professor Josefa, these bankruptcies are directly related to the collapse of FTX. Prior to its demise, FTX volunteered to operate as a white knight, and companies like BlockFi had direct exposure to FTX and connected entities. BlockFi's major creditor is FTX. The crypto industry's interconnectivity and opaque nature aggravate financial, operational, and liquidity risks. Furthermore, the collapse of FTX corresponded with a decline in the crypto market, exacerbating these issues. The bigger concern is how to regulate crypto lenders. The SEC has negotiated a settlement with BlockFi, but the underlying issue is that when a business model is built on an inherently risky and innovative asset class, securities legislation and registrations do not prevent enterprises from collapsing. The bankruptcy of crypto lenders demonstrates the need for a better and different regulatory approach. As for changes to regulations, there haven't been any yet, and it would require action by Congress to authorize those changes. There are currently 2 bipartisan bills pending in Congress that would confer jurisdiction to the Commodities and Futures Trading Commission, CFTC, to regulate the spot market for cryptocurrencies. But those bills will die at the end of the year. It's hard to predict if we'll see any legislative action in the new Congress, especially with the Republicans controlling the House of Representatives and the Democrats controlling the Senate. In a document-based research, US Senator Elizabeth Warren spoke on the FTX collapse, saying it shows crypto may be more entwined with the banking sector than the lawmakers are aware of. However, Professor Josefa argues that Congress should avoid overreacting during a recession and instead concentrate on finding answers to the issues facing the cryptocurrency business. In order to improve financial regulation, Congress must create new strategies and provide regulatory bodies the freedom to carry out their generally excellent mandates. A thorough whole-of-government strategy for financial innovations like blockchain-related services and crypto assets should be developed. Legislative resources should be wisely directed toward the genuine problems that the crypto economy is currently facing and the prospective developments in technology. Allegedly, The SEC was going to give FTX no action relief. This could imply corruption within the US government and further erode the confidence in the market. CZ decided to utilize this opportunity to strike and dump FTT tokens on the open market, causing the token's price to collapse. This move triggered a domino effect that led to the collapse of more than 100 affiliated companies and wiped out countless savings. The situation was further complicated when Changpeng Zhao, CEO of Binance, another major cryptocurrency exchange, tweeted on November 6 that he was planning to sell out Binance's stockpile of FTT due to recent revelations that have come to light. This tweet was widely seen as a reference to the CoinDesk article and its concerns about the financial situation of Alameda Research and FTX. Alameda offered to buy all the FTT tokens that Binance was dumping, but CZ refused. Sam called CZ, begging for help, and Binance decided to acquire FTX. But why did this deal eventually fall through? In November 2021, the crypto world was rocked by the tumultuous events surrounding FTX, a popular cryptocurrency exchange. It all started when Binance, a major exchange, struck a deal to acquire FTX's non-US branch to prevent a larger market crash. But the deal fell through, with Binance withdrawing from the acquisition after conducting their corporate due diligence. Following that, FTX disclosed that it had committed bankruptcy procedures for FTX, FTX.US, and Alameda. In contrast to Chapter 7 bankruptcy, which involves the liquidation of assets, Chapter 11 bankruptcy enables businesses to restructure their debt and carry on with operations. Following the suspension of all non-fiat customer withdrawals by FTX due to liquidity concerns, this notice was made. On the night of November 11, there appeared to be a hack that stole US wallets. The wallets had more than $600 million stolen from them, and FTX posted on its Telegram support channel to caution its users not to use the FTX apps because they included malware. FTX.US bank accounts were reportedly under attack, according to a Twitter user. With $9 billion in liabilities and only $900 million in easily marketable assets, FTX's balance sheet was in a mess when the hacking incident was discovered. A secret, inadequately labeled fiat ad account with a negative $8 billion balance was also noted in the balance sheet. FTX's woes didn't end there. The exchange is currently under criminal investigation in the Bahamas, where it is based. Former FTX employees interviewed by CoinDesk revealed that only an inner circle of Bankman-Fried's colleagues and romantic partners knew about the entangled finances of the companies. In a court filing, FTX's new CEO, Ray, painted a bleak picture on the company's financial situation, alleging that the exchange did not maintain adequate books and records or security measures with regard to its digital assets. According to an emergency petition attached to the FTX bankruptcy filing, there is solid proof that Bahamian regulators gave Bankman-Fried the go-ahead to access FTX money illegally and transfer them to the Bahamas government. These transfers would have taken place at the same time as the hack, so it's unknown if or when they occurred. These reports are backed up by a press release from the Bahamas Securities Commission. For FTX and its clients as a whole, the series of events proves catastrophic. When the Bahamian authorities detained Bankman-Fried on December 12th at the request of the US government, things took a dramatic turn. He is wanted by the United States for extradition on 8 criminal counts, including wire fraud and conspiracy to defraud investors. That couldn't have come at a worse time, because Bankman-Fried was due to testify before the House Financial Services Committee the next day. Instead of Bankman-Fried, FTX CEO John J. Ray III had to take the stand. Ray told the lawmakers that FTX had no record-keeping whatsoever, which irritated the committee. According to federal prosecutors, former Alameda Research CEO Caroline Ellison and FTX co-founder Gary Wang pleaded guilty to charges emanating from their participation in schemes to defraud FTX's clients and investors, and related crimes on December 19. This development increased the amount of pressure on Bankman-Fried. On January 3rd, Bankman-Fried showed up in a courtroom in New York and entered a not guilty plea to all of the accusations leveled against him. It is possible that a criminal trial will be held as a result of his choice to dispute the accusations. We have to wait and see what happens after this point, as the case is still developing. This lack of financial stability meant that FTX cannot meet its obligations, causing a ripple effect throughout the industry. One of the most important events in the history of the cryptocurrency market was the collapse of FTX, with its impact felt by investors worldwide. The strange ties that link FTX to American politics, the war in Ukraine, and Enron are both shocking and intriguing. FTX's connections to these events are still shrouded in mystery, but it is clear that the collapse of FTX has far-reaching consequences that are still being felt to this day. To sum up, Bankman-Fried's launch of FTX has been incredibly successful. Still, concerns about the financial stability of his trading company, Alameda Research, and the exchange itself had cast a shadow over his achievements. These concerns were made even more serious by the CEO of a competing exchange announcing his plan to sell off his company's FTT holdings due to the revelations. The rise of cryptocurrency has opened up new opportunities for investors and brought new risks. As we have seen with FTX, the market can be incredibly volatile, and even seemingly secure investments can quickly turn sour. To stay informed and protected, subscribe to this channel. We will always update you with the latest developments in the markets, and be wary of investing in unknown or unproven projects. Enjoyed the video? Now watch this one.